हेलो हमजा। हेलो जी। हमजा टाइम हो गया, अभी तक आए नहीं है।
ये अब्दुल्ला।
जी सर, अस्सलाम वालेकुम।
अस्सलाम। वो मैंने आपको भेज दिया है वो फाइल्स,
ठीक है सर, मैं
वहाँ अटैच कर दो आप।
जी सर, आप बस स्क्रीन शेयर कर लें, फिर 1 मिनट हम स्टार्ट करते हैं। ये मैं आपको ड्यूरिंग
बस
अपना
मैं
दबा भी लगाता हूँ।
हाँ, एक मिनट में जरा टेस्टिंग प्लेटफॉर्म खोल रहा हूँ। तो तुम मुझे वो कमेंट बॉक्स खोल दोगे ना? स्क्रीन शेयर कर रहा हूँ।
ओके सर। स्टार्ट कर दो। जी स्टार्ट करें। 4-4-1। जैसे मैं स्टार्ट कर रहा हूँ, ठीक है।
इसका पेन है, पेन इसका पेन है। ठीक है, कर दो कर दो, इसका पेन नहीं है। Okay, hello everyone, welcome to day 2. I hope you all are well. Please quickly confirm. Can people hear my voice? Yeah, please can you confirm using the chat box? Okay, so I need confirmation in relation to 3 things. Number 1, you can hear my voice. You have already confirmed that. Second, can you listen to the audio? Okay, can you listen to the audio? Sorry, is the video clear to all of you? Okay, you can see me, right? And the screen as well. Okay, that's great. That's great. So now let's begin with the day 2 of this performance management webinar. And I'm your instructor, Rizwan Mania. How are you people doing today? How are you? Okay, so how was the yesterday's session? Any objective learning yesterday? Okay, and the examination technique that I covered in the last class, was it easy for you to grip, understand, I'm sure you know what exactly easy marks are now. So you exactly know the meaning of easy marks, right? Okay. So now, yesterday we were left with just two calculations. I just quickly want to go through those two calculations, just because if anybody is not clear about those, so he or she should understand. I also shared the slides, sorry, the spreadsheet answer on the WhatsApp group. Uh, if you have seen the group, I've shared the spreadsheet answer, and that spreadsheet answer also includes the formulas and everything. So you have a sample answer of spreadsheet. You can just check your WhatsApp groups, and you will find that Noble Company answer, right? So uh, now, I just quickly want to jump towards what we did yesterday. But before that, let's again, let me tell you how to remain connected after the webinar, as people were connected with me yesterday. So this is my WhatsApp number. You can quickly note it down if you don't have, if today is your first session. So just note it down. This is my WhatsApp number. You can send me a quick WhatsApp uh, at this number, and I'll add you in the group. Secondly, how to remain connected during the webinar. So it's a chat box given here. You have a chat box. Just use that tool. Whenever you need to ask anything, you can just write in the chat box. I do look at the questions, and again, when I'm explaining a thing, don't ask question until unless I ask myself, and all those questions that you will ask should relate to the topic only. For general question and answer, we will have 10 minutes at the last. Okay. Now, is PM hard? So this is my question from you people. Come on, what's a quick answer? Is PM hard exam? Let's see how many people will respond me today. Okay. Okay, Osama, if you missed the first session, you can watch the recordings and just send me the WhatsApp message. I will definitely add you in the group. Okay. So the answer is a big no. PM is not hard. Performance management is not a hard exam. Okay, it's not a hard exam. Yeah, but it does require students to work hard. Okay, so it requires you to work hard in order to gain knowledge of all areas. So yeah, you need to work hard. If you need to reach at this level, the paper then will not be difficult for you. But if you do not change yourself, if the I yesterday told that you need to step up from MA towards PM, this is what is needed. Okay. So webinar day-wise plan, just to give you a quick recap. Day one was about budgets. Day two will be for variances. Day three, very important coming up, performance measurement. I will definitely be telling you mind-blowing techniques in performance measurement to make this easy for you, followed by decision making and advanced costing technique. Uh, yeah, again, a quick idea about the next 2 weeks plan. Those who are new to this session, they can have a look. You need to cover up all the webinars that are conducting, that I'm conducting right now, all 5 days. You have to follow the $1 million plan. I did share the $1 million plan yesterday for budgets. I'll do this for variances today. The grand revision, I'll let you know about it. You need to read few chapters from the book. I will send you the screenshot and will let you know the chapters. Rest you have to cover from my easy slides. The study notes are given to you. Just use that, and then be ready for the mock. Mock is important, so you need to solve and get it checked by a PM tutor. This is very compulsory. Okay. Then we will be moving towards today's agenda. So today we will be starting with mix and yield variance, but this will done after I quickly give you the idea about the calculations about the yesterday's question. Then planning and operational will make this easy for you. Then we will be discussing theory this time. today the written theory I'm talking about. So I will make written theory easy again for you people. Uh, if we will be left with time, then we will start with the introduction of performance measurement, a section that we'll be starting tomorrow. Then question answer session. And yes, people were asking me yesterday, what about the break? So break is 5:30 to 5:45. Okay. Now, here we go. So let's first begin with the question that we were doing yesterday, and I will not spend much time on this. I'll just quickly go through the calculation. I did explain the technique, how to get easy marks. Everything was discussed yesterday. The only thing that I'm focusing today is on the calculation of staff wages. So those who are not part of the yesterday's session, don't worry. We'll just spend few minutes on this. And once you will watch the recordings, you will get to know what exactly I'm doing here. The staff wages and energy cost is what we need to compute in the today's session first. So let's begin. Okay. Now, I'll quickly jump towards the solution as I mentioned. This point was important and this point is also. So what are we supposed to do? Let's do calculation here. It says that when the number of orders per day does not exceed 50, each member of the staff is required to work exactly 6 hours per day. Okay. For every incremental increase of 5 in the average number of orders per day, so incremental means additional, each member of the staff has to work 0.5 hours of overtime, for which they are paid at an increased rate of 12 per hour. Okay. Now, it's simply a situation of overtime. So what exactly are we supposed to do here? So we quickly look at one thing, and that is we look at the actual meals that right now we have. And as the question has stated that it is open for 6 days a week and 4 weeks in a month. So 6 into 4 makes 24. Okay. So it is open for 24 days in a month. Now, the actual meals are 1560 and 24 days it is open. So what I can do here is first let me work out my actual meals per day. So how will I work out? 1560 divided with 24 days will give me 65 meals per day. Okay. This is my actual meal per day, 65 meals per day. Okay. Oh, now just focus on the keywords. It says that when the orders per day does not exceed 50, okay, does not exceed 50, every member requires to work 6 hours a day. So let's do one thing. Let's calculate the hours, okay, based on 50 meals per day. Okay. Let's work out the hours based on 50 meals per day, because it's the normal time that we are calculating here, because it is mentioned that when it does not exceed 50, each person works for 6 hours a day, right? So 6 hours per day multiplied by uh, 24 days, okay, in a month, right? So 6 hours into 24 days in a month. So 6 into 24 is 144 hours per worker. This is per worker, right? Because it is mentioned here the word each. Now the question is how many staff we have here. So we can quickly check in the scenario at the top. So it has 8 restaurant and kitchen staff. 8. Okay, so there are 8 restaurant and kitchen staff. Okay, so 144 into 8 means 1152 hours right? 1152 hours. And these are known as normal working hours. Okay, normal working hours are 1152, right? So I hope no problem. And for these normal hours, they are paid at the normal rate, and the normal rate is given to you here, that is 8 per hour, right? So I'll just go and multiply this with 8, and I can work out the cost, which is 9216. Now, this is the staff cost for uh, 50 meals per day. It is based on 50 meals per day, right? This staff cost is based on 50 meals per day. Okay. So that is why I worked out this, and these are my normal working hours, and this is my normal rate per hour. I can write here rate per hour. Okay. Now, the question has stated very quickly, the question has stated for every incremental increase of 5 in the average number of orders per day, okay, for every incremental increase of 5. Now, as we have already worked out that the actual meals that we uh, have per day is 65, okay, and the working that I have done is on the basis of 50 meals per day. So how many meals are extra? So extra are 15 meals per day. Okay. So 15 meals per day are the extra ones, right? Because I've done the working for 50 meals and my actual meals are 65. So 15 meals are the extra, and for these extra meals, they need to work zero point 0.5 hours. 0.5 hours they need to work for these extra meals. Okay, and that is again written here, each member of the staff. Okay, each member of the staff has to work 0.5 hours of overtime, for which they are paid at an increased rate of 12 per hour. Okay, now it's simple what to do. For every incremental increase of 5, they work 0.5 hours. So if I keep this in my mind, this means that for every incremental increase of 5, for every 5 they work 0.5 hours, right? So as our meals are 15, which means for the first 5 it will be 0.5, for the next 5 it will be again 0.5, that makes to 1, for next 0.5 again it will be more 5 hours, and that makes 1.5, right? So I beg your pardon, let me repeat this again. For the first incremental 5, zero point 0.5 hours. For the next incremental 5, again 0.5 hours. For the third time, incremental of 5 makes 0.5. So how to work out the hours? So it's very simple. If you divide this with 5, so this means three times you will use the hours, right? So 3 times multiplied by 0.5 hours means that 1.5 hours. Okay. So for the first 5, 0.5, for the next 5, it's again 0.5, that makes to 1. And then for the third 0.5, sorry, for the third 5 meals, it goes to 1.5. So each person has to work 1.5 hours for the additional 15 meals, okay, for the additional 15 meals, right? Now, let's do the calculation. 1.5 hours into 24 days into 8 employees, so that makes 288 hours, right? Now these 288 hours will be classified as overtime. Okay, we will classify this as overtime. Okay, so I hope this is clear. For every incremental increase of 5, 0.5 hours will be worked by each staff. So because our meals are 15, which means 0.5, 0.5, 0.5, and this is 1.5. Okay. So as you just saw here, yeah, I've written the total figure. It's 144. Okay. I've written the final figure. That was the answer. So 1.5, 144 hours, right? And this is your overtime. Now for this, you have to pay an increase rate. And what is the rate? So the rate for this is 12. This is the overtime. Okay. So 144 into 12 means 144. It's 288, not 144. Okay, 288 into 12 is 3456. Okay, so this is the overtime pay, right? This is the overtime pay, and this is the normal pay. You can see here the hours that we took, sorry, rate per hour that we took is 8, and here the rate per hour that we took is 12, because this is overtime and this is the normal pay. Okay, so this was the most difficult calculation, and the weightage of this calculation was 1.5 marks. Okay, so if I add 3456 plus 9216, so the figure total will be 12,672, and this is your staff wages. Okay guys, so I hope this is clear, and I did mention yesterday, you don't have to worry if you are not able to do this in the paper. You can write the format, you can get 9 marks easily, as I did explain yesterday. So this calculation that I did was for the normal, and this was for the overtime, right? This was for the overtime. Now moving towards the energy costs, which was totally dependent on the total number of hours worked by the hourly paid staff. Okay, so now it's easy to work out because we have the hours available here. 1152 hours, okay, plus 288 hours, right? So 1152 plus 288. So this is 1440 hours altogether. Is this clear, everybody? Okay. So now it's easy. 1440 multiplied by the rate of absorption is given to you, and this is 2.94. 2.94, and 1440 into 2.94 is 4234. So here we have the two figures, friends. I hope this is clear. Now let's look at the questions. So why I multiplied with 24? Because these were given me per day, okay, and 24 days the restaurant is open, so all these was given to me per day. As you can quickly see here, this is per day. That's why I had to multiply this with 24 days. And if you are clear, not clear how 24, so the restaurant is open for 6 days and there are 4 weeks in a month. Okay, now any other question? Yes, please, any question? Why I calculated extra hours? Because the question has stated, you can look here, because the question has stated that for every incremental increase of 5, which means this is an additional hours that will be worked, as our meals were 65 per day, and if there are 50 meals per day, then our workers have to work 6 hours. But when the meals exceed 50, so they have to work more hours, and that results in overtime. So that is why I had to do this calculation. Okay. Okay. Got it, everyone? Clear? A quick yes, please, from everyone so that I can move on. Are we clear, everybody? Okay, now I have also shared the spreadsheet answer with you people on the WhatsApp group. Okay, I was just telling you here 3 times I have to uh, apply the overtime hours. 15 meals divided by 5, right? Because it says for every incremental increase of 5. So 0.5 hours will be worked. If you are not clear about this, so you can listen very carefully. For the first additional 5.5 hours, for the next additional 5.5 hours, for the next additional 5.5 hours, that makes 1.5. Okay. You did it wrong, Rashid, because 31 days were never given. In the question, it was very clearly mentioned. If you see here, 6 days and 4 weeks. Okay, how to show calculation on spreadsheet? I have shared the spreadsheet answer on the WhatsApp group, so please just check that. Okay. I think we are done with this one. You can check the spreadsheet answer as well. And if you feel like if you are facing any issue, don't hesitate at all to contact me and I'll help you out. Okay. Now, let's move on towards the next area for today. And this is variances. Uh, Let me tell you quickly, learning curves, very important for paper. I've covered in my previous webinars. In fact, 2 to 3 times I've covered this. So I will not invest my time here. I will not waste my time for learning curves. And I'll suggest you that once I will share the $1,000,000 plan, in that plan, I will definitely add this, and you can watch the videos from the previous webinars. So you can cover up learning curves. If you're not clear, I have done a very detailed discussion on learning curves earlier. So I want if to watch the video. If you think you're not good, so you can do that. Okay. So I will not invest time here in this webinar. I will share the links in my $1,000,000 plan relating to learning curves. Okay, let's move on. Now, variances. As I promised that every day I'll show you a past paper analysis. So please now be with me. Our official session for today has started. So be with me. I'll teach you new techniques and yeah, and new things will be done today. Okay. One last thing, I'm getting some questions here. I did mention, please don't waste your energy by writing the questions that are not relevant to the topic right now. Please just strictly follow this. Once I will end the entire session today, last 10 minutes, you can ask whatever questions in general you want to ask, like the theory chapters, like the book, the syllabus, common areas. I will all answer those things at the end. Right now, whatever question you need to ask relating to the topic that is going on, you're most welcome. Okay. Now, variances, past paper analysis. Variance is a very heavily tested topic. Very, very heavily tested topic. December 2007, let's start the counting and you will, get tired by counting. 2007, 2008, 9, 9, 10, 10, 11, 12, lots of time. because there are three areas in variances. The three broad categories I can say is the planning operational area, okay? It's the mix and yield variances, okay? Sometimes very rare general variances of previous paper of management accounting used to come initially. That was way back in 2008, okay? But not these days. Then June 2013, December 2013, June 14, December 14, June 15, December 15, March, June hybrid 16, March, June hybrid 17, September, December 18, and March, July 2020. So heavily tested, heavily tested. So the categories I was talking about, the first is planning and operational, as I mentioned before. And second is mix and yield variances, okay? And third is sales mix and quantity. So I'll just mark the names here, 1, 2, 3. General variances will not come. So less chances of that, obviously. Connected with advanced variances will definitely be tested. So in total, if I do a quick analysis in front of you, so a quick analysis says total tested 18 times and general variance came 11 times, and that was again way back in 2008 and before 2010, I would say. So not a very high chance. No chances of general variances coming, the one that you covered in F2. Mixed yield 28% of the times, sales mix and quantity 17% of the time, and planning and operational the most 44% of the times. So planning and operational has been tested most, because in planning and operational, examiner has a very good chance, okay, very good chance that examiner can test material planning operational, examiner can test sales planning operational, or labor planning operational, okay? So the analysis shows that heavily tested topic is variances, okay? And in this, the first one is planning operational, that comes the most. Then second, mixed variance has been tested. Then sales mix quantity, and last the general ones. So considering this, it is expected to come again in your paper in March 21, and I feel like mixed yield has a chance this time, because sales mix quantity was tested in 2020. So I think mixed yield has a chance, and planning operational, can come anytime, right? So considering this, I've selected the topics for this today's session, that is mixed yield and planning operational, the most two that came, as you can see in terms of percentage, the highest. And let's start now with mix and yield. So you know my strategy. I will not invest too much time on the basics, because my assumption is that you know the basics. So my most of the time will be invested on past paper questions, techniques, section B, section C, section A, so that I give you the maximum learning when it comes to solving the questions. So be with me and remain attentive. A quick recap bit of mix and yield. What is mix and yield? So mix and yield variance is basically a further bifurcation of usage variance. Now we all know what is usage, the material usage I'm talking about. So material usage variance is further bifurcated into mix and yield. Okay, it is further bifurcated into mix and yield. Now, a quick idea. There are two conditions. If you fulfill the two conditions, then you are only allowed to split usage variance into mix and yield. So the condition number one is it will be used for a product that uses more than one material. A product in which you require more than one material, like cake, you manufacture cake, you make cakes, so many ingredients you use. You make soup, right? So many ingredients you use. So products in which you are using more than one material, yeah, this is the first condition. Okay. And the second is also very important. Materials are interchangeable. Now, what interchangeable means? This may come in OTs, section A. Interchangeable means that if you have used one material in a lower quantity, that will be compensated by using the other material in the higher quantity. A quick idea, very quickly. For example, you making tea. Okay, tea. You know tea, right? We did tea. So you are making tea, and in making tea, you are using water and milk. So water and milk both are the ingredients that you use while making a tea. So a quick example is that if you are using less amount of milk and you increase the amount of water, so this is interchangeable. Less amount of milk, and how did you compensate that? By increasing the amount of water. This is interchangeable. So this means that one material was used less in quantity, and to cover up that, you increase the quantity of the other material. That was an interchangeable material, which is water, and you are able to make the tea. So tea is something that you can make by changing the proportions of the ingredients, because these are interchangeable. So remember that when you will work out mix and yield, when these two conditions are met, number one, more than one material input should be used, and material should be interchangeable, so you can work out mix and yield. Now, what mix indicates? It is the difference between standard mix allowed, okay, standard mix allowed, and actual mix that you have used. So mix basically just reflects the difference of uh, standard mix and the actual mix. A quick example again, if you ever know how to make food. I don't know whether you make food. Do you make food? Some good dish. You know how to make some good dish? In Pakistan, it's very famous biryani, right? So we people, eat biryani like we are crazy about it. So it's a name of a dish. So there are different spices that you use in making this. So there are certain manufacturer of spices, like we have Shan here in Pakistan. So they actually manufacture the spices to be used in biryani, right? So whenever you buy that spice box from Shan, so at the back of the box, they print the recipe. Okay, they print the recipe to make biryani, to make that food, right? So that basically recipe is what? That recipe is your standard mix. According to the box, this should be the mix. That is, you have to use this ingredient by this proportion, this ingredient by this proportion, this ingredient by this proportion. So this is basically standard mix. But when you start making it, actually, you use your own skill, your experience, and you just differentiate that by using different proportions. So when you start making it, your actual proportion gets different to what that is written on that box of spice. That is the difference. So whatever is written in that box is standard mix. You should follow this. And when you start making it, you use your own experience. So your actual mix deviates from that standard mix. So because of this deviation, that variance arises is known as mix variance. Okay. So I hope this is clear. Now comes the yield variance. This variance basically the true meaning of yield is output. Okay, to be honest, the true meaning of yield is output, but you can work out this in terms of input as well. Okay, so let's see. This is a difference between what? This is a difference between standard output, the output that you planned and the actual output. The actual output means the output that you received at the end of the day, right? Or if you are working this out in terms of input, so if you're working this out in terms of input, so there's a difference between standard input allowed, the input that you were allowed to actually use, and the actual input that you have used. Okay, so you have this option available either to work out through output method or input method. I normally prefer input method because in input method you don't have to deal with the losses, right? Until unless this is explicitly mentioned in the paper. So you use input method. So input method basically is something that tells you how much you should have used in terms of input and what is your actual input. So a quick idea I've given you about mix and yield. Now let's move towards the formulas that you need to keep in your mind. So formulas are first and the reasons then second. So the first is mixed variance formula. Uh, now this time I'll do something different. So listen very carefully. Mixed variance, the formula is actual input in actual mix, actual input in standard mix, the quantity variance, then standard price per material input and cost variance. Okay. Yield variance is actual input in standard mix, standard input in standard mix, quantity variance, standard price per material input and cost variance. So as I've covered variances, mixed variance in my previous webinars as well, uh, I will today teach you a new technique here. Okay, for yield. For yield, I'll teach you a new technique because these formulas is what I've covered previously as well. And I've covered yield variance, this formula in previous webinars as well. Today, what my point is that I need to teach you a shortcut. And if you are able to use shortcut, so that's really nice. Okay. So that shortcut will save your time, especially when it comes to section A or B question. So very carefully listen what I'm saying. All those who are interested in knowing how to work out yield method using this formula. So this is basically individual material formula for yield, individual, right? So I will not cover this because I've covered this in my previous webinars, and I'll share a link of one of the questions through which you can understand this individual material yield formula. Right now my focus will be on shortcut, and I will teach you this shortcut, and this shortcut will really save your time when it comes to yield variance, especially I'm saying when you are required to work out variances in what I can say section A or B. Okay, because in section A or B, it's time. The most biggest thing is to save your time and look for the shortcuts. So I want to make this webinar so productive that you are able to do the things easily in the paper. You learn the shortcuts. So I'll use the shortcut right now. So for mix, I'll use the same formula. This is the only method to do it. But for yield, you have either this method of individual ones or the total one. So this is basically the total method I'm talking about that I'll be using in the today's class, and will teach you this method. For the individual ones, you can refer to my previous webinar videos, and the link of that I'll share today. Okay, so let's begin with a past paper question, a different question that came in the paper, and that is Romeo Company. I'm starting with this very good question, Romeo Company. It's basically OT case, and you know that yesterday as well, I did mention that in OT case, I think people are doing really bad. They are losing easy marks because they are not referring the questions according to the requirement. So it's time to move towards this area of section B. And again, tips. What are the tips? Try to complete this in 18 minutes as per the exam timings of 1.8 minutes per mark. So if this is for 10, so you should be completing this in 18 minutes. Okay. Secondly, actively read scenario based questions, highlighting information that is relevant for each part of the requirement. so that you are not doing the mistake that we discussed yesterday, that you are not identifying the right statements, whether those are true and false, keeping in mind the scenario. Okay, so just remember the techniques. Let's move towards the question. Now, this is an exam app in front of you where you can see highlighter, strike through, calculator, and scratchpad. Scratchpad is generally given to you in the paper to do your rough workings. But remember, no marks will be assigned to Scratchpad. Whatever working you do in Scratchpad, whatever you write, examiner is not concerned when it comes to marks calculation. So it's kind of a rough area for you. You can use Scratchpad. Highlight option is really useful while reading. So let's read. But as I mentioned yesterday, first skim through the requirements so that you get to know exactly what is being asked. So when you read the scenario, you have in back of your mind the requirements. As I want to move towards requirement 1, so I'll highlight this as well. What was the total favorable material price variance? Yeah, for month 3. Now just highlight the months here. Price variance for month 3 to 2 decimal places. This is important, okay? 2 decimal places, right? So this is important, as you know that decimals can result in wrong answers. So I'll just highlight this. Okay. I want to move towards the next slide. So caution is that you need to scroll this down. Until unless you don't scroll it, you cannot move, right? Okay. Second question, what was total material mix variance for month 3? Month 3. Months are important here. And then this is a drop down question. You have the options available and you can see you have options here. So you can select, but for that you need to work out the answer. Now, see again, you need to scroll at least once. Okay. So this is not allowing me due to some tablet configuration, I guess. That's why I'm not able to move this further because of the tablet resolution issue. So I can use my navigator here. This is something you will not face in the paper. So I'll just use my navigator here and I have question number 20, but I think I cannot move until and unless. Okay, let's start with the solution now. And let's then look at the requirements. So I'm completely stuck here because it is not allowing me to move either ways. Okay. In the meantime, let's begin by reading the question. Let's not waste time. Let's read the question here. And the question is, Romeo Company is a business which makes and sells fresh pizza from a number of mobile food vans based at several key locations in city center. Okay. It offers a variety of toppings and dough bases for pizzas and has a good reputation for providing a speedy service combined with hot, fresh, tasty foods to customers. Okay. Each one employs a chef who is responsible for making the pizzas, two Romeo recipes, and two sales staff who serves the customers. All purchasing is done centrally to enable Romeo to negotiate bulk discount and build relationship with suppliers. Romeo operates a standard costing and variance system, and standard cost card for the Romeo basic tomato pizza is as follows. I'm sure you're not hungry right now, okay? So the cost card is given to us, and the cost card is what? Let's highlight. There are 4 materials here. So you have weights in terms of kgs and price per kg given. Okay. And let's now Okay, let's now start with the solution of mix first, and then I will do some alternative for this question. So let's start with the mix calculation. We need to work out mix variance first, and information is given to me. I need to work out for month 3, and this is definitely month 3 that is given to me. So let's start with the solution of month 3 first. Okay. Okay. So let's start with the solution here. Uh, how will I do the calculation? Now, the formula that I just saw, so the formula is that we have to use, okay, where is the formula? Yeah, here we have. Now, actual input in actual mix, then actual input in standard mix. So let's start with actual input first in the question. Where is the actual input? So it says that 90 pizzas in actual were produced and the quantities are given here: 18.9, 6.6, 14.5, and 2. So that makes total of 42. This is the actual input in actual mix. Getting the point? Okay. Okay. Now actual input in standard mix. Okay. Actual input in actual mix. Okay. So I will start with actual first. And as the question has mentioned about this, DTCH, and the quantities are given to me here. So the quantities are 18.9, 6.6, 14.5, 6.6, 14.5. Sorry, I beg your pardon. 14.9. Okay, can you just add these all? So that makes around 42. So this is your actual input in actual mix. Okay, now please be with me. So what you have to do here is that you have to convert this actual input now into standard mix, right? So let's convert this into standard mix. And how will we convert? So it's simple. We need to work out the standard mix, the percentage of standard mix, and we'll multiply this with actual input. Okay. So how will we do this, friends? The question has given us the information. So I'll just highlight all these, which will definitely be useful. So 0.2, okay, divided by 0.42, 0.2 divided by 0.42 multiplied by 42. So this will give you the standard mix quantity for actual input, right? I'm sure you all are working with me here. Number 2, number 3, number 4. So it's 0.08 divided by 0.42 multiplied by 42. Then it's 0.12 divided by 0.42 into 42. And last is 0.02 divided by 0.42 into 42. So guys, can you tell me the answers? What answers are we getting here? For the first one, the answer that I am getting here is 20. Okay, come on, just write the answers here. For second one, the answer that I'm getting here is 8, right? For third one, the answer that I'm getting here is 12. And for the last one, the answer that I'm getting here is 2. Okay, so yeah, you're right. So what exactly this means? A quick idea. What you have done, you have converted the actual input into standard mix. You have converted the actual input into standard mix. Okay, so 28, 12, and 2. This is a standard mix percentage that you worked out, and you converted the actual input in standard mix. So let's write here 20, 8, 12, and 2. And what do you think the total will be equals to 42? Yes or no? Yeah, the total should be equals to 42 because the amount of input is 42 and you have converted this into standard mix, right? So done with this one, guys. Yeah, we are done with this one. Now the quantity differences. Let's work out the quantity difference, the quantity variance here. Okay, first 20 minus 18.9. So it's 1.1. Okay, second 8 minus 6.6 is 1.4. Third, it's 12 minus 14.5 is 2.5. And last is 0, right? Now, a quick reply. The answers that the difference that we are getting here, the answers of the difference that we are getting here are positives or negatives. So remember, just if you keep my formulas in mind, okay, if you keep my formulas in mind, remember what I'm saying. So if you keep my formulas in mind, if the answer is negative mathematically, so it's adverse. And if it is positive mathematically, that's favorable. If you keep my formulas in mind, so if your answer is negative mathematically, so it's adverse, okay? And if it is positive mathematically, so it's favorable. So let's have a look here. In case of the first one, it's positive, so it's basically favorable. Second, it's positive, it's favorable. Third, it's a negative answer. Mathematically, 12 minus 14.5 will be what, right? 12 minus 14.5 will be negative, right? So it's adverse. So if you remember my formulas and forget the others that you did before. So remember, whenever you find my, whenever you use my formulas, if you get answer mathematically positive, so it's favorable, and if you get answer mathematically negative, so it's adverse. Okay, so the net result, if you look here, the net result of these three will be equals to what? 0. And this is the biggest indication that you've done correctly. So mixed variance always end up in a 0 answer. And you know why? It's because 42 is the input you took for actual and 42 is the input you took for standard mix. So the mix is same in both the cases. Sorry, the total input is same in both the cases. So obviously the answer net will be 0. Okay. I'll give you the concept of favorable adverse as well. Just wait for a minute. Let's move on towards the next area, that is standard rate. So let's find out the rates. What are the rates here? Okay. 7.6, 2.5, 20, and 8.4. Okay. Let's multiply to work out cost variances. I hope you all are solving with me, right? And 2 decimal places, okay? Okay. So anyone with the answers? Yeah, anyone with the answer? So when it is negative, it's adverse, right? And when it is positive, it's favorable, okay? So you just net off these and you will get the answer. And the answer is 38.14 to 2 decimal places. 2 decimals were required, okay? 38.14 is the answer. Now, is the answer positive or negative? So if you don't know the concepts, let's assume you don't know the concepts, okay? So if you don't know the concepts, you look at this figure, that is positive, positive, negative, and the net answer is what? Net answer is obviously negative, right? So this is adverse. Now mixed variance is adverse, okay? Mixed variance is adverse. Now if conceptually you need to understand, so I'll quickly give you an idea if you don't know. So listen very carefully. In mixed variance, as the difference is of mix, okay, as the difference is of mix, so what you look here, you look at the most cheapest material out of all. So the most cheapest material out of all is this one, cheapest in terms of rates. And look at the most expensive material out of all is this one. So this gives you a very good idea. Cheapest material is this one, okay, and the expensive material is this one. So let me just look at the names. It's tomato sauce and cheese, right? It's tomato sauce and cheese. So tomato sauce and cheese. Now by looking at the two extremes, you will understand. So you just try to figure out the most expensive material was cheese, which means it's adverse, and adverse means you have used more cheese. Okay, adverse is what? You have used more cheese, so you have used the expensive material more here. So let me write here expensive cheese. Okay, so expensive cheese used more. Okay, expensive cheese used more. This is adverse. Got it? Now, if you look at the cheaper material, or I would say the cheapest material, first of all, so the cheapest material was tomato sauce, and you use tomato sauce favorable. And favorable means what? Favorable means what? You have used this less. For material, if you get a favorable answer, so it means you have used it less or more? Less, right? So as you can see here, that it's favorable. This means cheaper material used less. Getting the point? Okay. So expensive cheese used more because it is adverse, and cheaper material, which is your T and even D as well. These both were cheaper. So you used both in lesser quantity, and when you use less material quantity, so it's favorable, right? So the net result, if you look here, is adverse. It's because the expensive cheese was used more. So you changed your mix, and when you change your mix, so you've used expensive cheese more and the cheaper material less. Okay, so I can call this as a expensive mix as well. This can be called as expensive mix for the company. Agreed? Expensive mix for the company, right? So two things I need to conclude. If you follow my formulas, if you get answer negative, it's adverse, which means more used material. If you get positive answer, it's favorable. This means you've used less material, right? Then what you do, you look at the cheapest and the expensive material. So once you look at the cheapest one, as you just saw here, this is 2.5, and favorable means you have used this less used. Okay, less used is this one, right? Less used. And the other one is expensive, which you have used more, so more used. So by using more cheese, you spent more money, and by using less tomato sauce, you saved your money. So in short, what happened here, here you saved, and here you spent more. So the net result is what? You saved 8.36 and 3.5, whereas you spent $50 more on expensive. So the net answer is you have spent more. And spent more means what? Adverse. I hope this is clear. Now let's go back to the slide where we can quickly look at the variance reason of mix. You can see here the answer came adverse. So why it is? Cheaper material is used less. That was tomato sauce. And expensive material is used more. That is your cheese. Got it? Right. You make this vice versa, that becomes favorable. And what will be the case? When cheaper material is used more and expensive material is used less. So you will save in that case, okay? You will save in that case, and that will be favorable. So the vice versa is favorable. So mixed variance made this clear, that mixed variance is a difference between standard mix and actual mix. As you just saw in the solution, that it's a difference between standard mix and actual mix. Here you see. And the biggest indication of that, is your input is actual. Your input is actual. So basically, it's not an input versus input difference. Are you getting the point? Input versus input. Okay. So it's not input versus input. It's basically mix versus mix. Standard mix versus actual mix. Your input is same in both. It's the difference that is coming just because of the mix difference. Agreed? Okay. So guys, are we clear about this one? Okay, no issues, I'm sure. No issues here. Just a small change I want you people to make is in my formulas. If you have the sheets that we shared with you people, just interchange this. Okay, this will come here and this will go here. I'm just doing an interchange because this interchange will give me the benefit that if answer comes negative, it will be adverse, and if it comes positive, it will be favorable. I hope this is clear to all of you. So just make this interchange and the concept is clear. Yes, guys, any question? Understood? Say yes or no. Okay. One question I just quickly address of Mohammed Hussain. Mohammed Hussain, you can see here in the calculations, please, it's very obvious that according to standard, you should have used 20 kgs of D, but in terms of actual, you did use less. Okay, so when you use less, it's favorable. Okay, when you use less, it's favorable. Got it? And in case of cheese, you were required to use 12, but you did use 14.5. Okay, so you used more, and when you use more, it's adverse. So I hope, Mohammed Hussain, your question is answered here. Okay. Sir, I didn't get 1.1 when I subtracted. 20 minus 18.9 is 1.1. Everybody knows about it. Okay. Yeah, it's good to read the requirements first so that you get to know what is written in the scenario. Okay. So guys, are we clear about this one, everybody? No issues? What's your feedback? Understood? I'm communicating using the chat box, Fahad. Clear? Understood, right? So this is an expensive mix that we have used here. Now, uh, okay. Now, let's move towards the requirement number 2. And again, there is some issue going on. So, but I know the requirement. So let's not waste our time and let's move towards the requirement number 2. I exactly know the requirement. So uh, let's solve. Okay. Now quickly, let's use this question number 1. So quickly, let's work out question number 1 answer. We were required to work out favorable material price variance. Okay. So how we will find out favorable material price variance? Any ideas, anyone? So do you remember the formula? For month 3, we need to work out. So it's not difficult at all. Let's do a quick working. Material price variance. So what is the formula for material price variance? So the formula is standard price minus actual price, okay, into actual quantity, okay. Let me repeat this: standard price minus actual price into actual quantity. Okay, so let's begin. Standard price minus actual price into actual quantity. We have 4 materials here, and it's D, T, C, and the last one is herbs, H. Okay, so what are we supposed to do, my friends? Here we have the actual kg price per kg given, and here you have these. Okay, and you also have the actual kgs given here, so that's a nice thing. See, we have these actual given here. So let's work out then very quickly. 7.6 for the first one, mine 2.5, 28.4. You can see the figures, and the actual is 6.5. Now you people will tell me the answer, okay? 2.45. I'll not use calculator here. I'll trust your answer. 21. Make sure you need to work out to 2 decimal places, and 8.1 into the quantity. So quantity is actual, okay? These are the quantities that are given here. These ones, right? So 18.9, 6.6, 14.5, and 2. Yes, friends, you work out the answer and you have to present answer in terms of total because the question has stated total, okay? Total is what you have to represent the answer in. So I'm waiting for the figures and let me look what answer you people are suggesting. So it's 2 decimal places, okay? Yeah, everybody is saying it's 20.79. Are you sure about 20.79? Okay, it's 20.79. So you need to add all 20.79. And if you are using my formula, so if you get mathematically a negative answer, it's adverse. Okay, mathematically negative answer, it's adverse. Now, is 20.79 total or it's for one product? Now you are asking me to solve, right? That I didn't want to do. Oh, that was for the first product. Yeah, I thought you just told me for the final product. So, okay, 20.79 for the first one, 2.5 minus 2.45 into 6.6. It's 0.33 for the second one, 20 minus 21, 14.5 for the third one, and last is 0.6. Okay, so if you are using my formulas, I'm telling you again and again, if you're using my formulas, if you are getting mathematically a positive answer, it's favorable. So let's have a look here. Are we getting the first one as a positive answer? Okay, the first is a positive, second is a positive, third is a negative, fourth is a positive, right? Okay, so 20.79 plus 0.33 plus 0.6 minus 14.5, and this is what? 7.22 favorable. Okay, so if you're using my formula, if answer you're getting positive mathematically is favorable and negative is adverse. I hope you're getting the point. You all know material price variance indicates what? I'll just give one example. Your standard price was 7.6, but you actually purchased for 6.5. So you purchased for a lower amount, and when you purchase for a lower amount, you saved that, and that is favorable. Okay, so you purchased for a lower amount, you saved that, and that is favorable. But here you were required to purchase for 20, but you did purchase for 21. You paid more for this, and when you paid more for this, this is adverse. Okay, this is adverse, right? Okay, so 7.22, let's search the answer. No, we don't have to search, we just have to input to 2 decimal places. So this is 7.22. Let me attach my keyboard, and this is 7.22. Got it? 2 decimals, right? 7.22, right? If I'm not wrong. Yeah, 7.22 favorable. So do I have to write favorable here? No, because the question has already mentioned this is favorable. So I don't have to input the letters here. Okay, you can't. It will stop you automatically. Done. Now, understood, guys? Clear? Okay. Now, for somehow this is again not working due to the resolution issue, and I have only one option left because it is not going sideways scrolling as well. So I have the same option, and that is to reopen this again. So let's reopen this again and go to where we want to. It's question 23 that we'll be solving right now. Yeah, I am doing this sideways, but because of the resolution issue, as I mentioned, it's not allowing me to drag here. Okay. Fazil, you are already writing in the chat box. Meanwhile, you can ask questions if you want to, guys. Okay, any questions here, please? Now, the shortcut of yield. Let's start with the shortcut of yield. Okay, here we are. Now listen, the long method of yield calculation or individual yield variance working that you need to do, if you want to learn that, you can watch my previous webinars for that. Right now, I'll teach you a shortcut here that will give you a quick answer for yield. So let's see. It says that in month four, Romeo produced and sold 110 basic tomato pizzas. Actual results were as follows. Okay, so this is for month four. So don't confuse yourself. This is month four. You have this information of actual for month four. What was total yield variance for month four? Okay, and it says that note your calculations to all workings to work two decimal places. Right now, listen. What I'm saying, try to understand. Uh, Either you choose a long method, okay, or you go for a shortcut. So here I will recommend that you follow the shortcut method. And what is the shortcut one? So you can see here we have a formula, and this formula will help us to work out the answer very easily and with less amount of workings to be done. Okay, so listen, it will save a lot of time. Now, actual input. So what is the actual input? Let's go to the question. And the actual input is 45. Here we are, 45. Okay, we are working for in terms of total, not individual. So input I'm talking about is 45, not the product sold. That is 110. So 45 kgs, right? Got it, everyone? Any issues? Okay. Second, standard input allowed. Standard input allowed. Now, what is this? Standard input allowed means what? That how much input you should have used for the actual production. Okay, so if you want me to write a formula for this, I can write standard kg per unit multiplied by actual units. Standard kg per unit multiplied by actual units. This is a formula if you want me to tell you. So let's go back and check in the question. Standard kg per unit into actual units. So according to standard, 1 unit should require 0.42 kgs. 1 unit should require 0.42 kgs. And how many were your actual tomato? You produced 110. You can see the highlighting that I'm doing here. 110 basic tomatoes you produced, and standard input was 0.42, right? So 0.42 multiplied by 110. So according to standard, how much should be your input? Can you tell me? How much should be your input? Okay. How much should be your input? It should be 46.2. Okay. It should be 46.2. So your actual input is 45, whereas your standard input allowed should be 46.2, which means you have used more or less. Can you tell me quickly, guys? So you have used more or less. You have used 1.2 kgs less. Less used. Okay, less used. Okay, so this is a very simple formula. Actual input is 45 kgs. Standard input allowed means how much input should be for the actual units. So that is what you can work out by standard kg per unit into actual units and 46.2. So 1.2 was less used. 1.2 was less used. That's it. So multiply this with standard rate per input kg. Now, this is the only working that you need to learn how to work out this. This is the only working that you need to understand how to work out. The rest is all simple. Okay. So let's see how to work out standard rate per input kg. The rest is simple, right? Up till now, it's simple. Actual figure and standard input allowed I did worked out. So now let's go to the question and see how to work out this. See, the calculation for this is simple. What I'll do, I'm highlighting here, just have a good look here. I'll multiply kg with the price for individual ingredients. I'll multiply these one by one. Okay. So let's do this in a working area. So it's 0.2 multiplied by 7.6 plus 0.08 multiplied by 2.5. Okay. 0.12 multiplied by 20 and 0.02 multiplied by 8.4. Few seconds. It will take few seconds to do it. Okay. So I've just multiplied these two together. So 0.2 multiplied by 7.6 is 1.52. And remember two decimals, right? 0.02 multiplied by 2.5. It's 0.20. 0.12 multiplied by 20. It's 2.40. And 0.02 multiplied by 8.4, it's 0.168. So to two decimal places, this will be 0.17. Okay, 17, right? So what I did, kg multiplied by rate, standard kg multiplied by rate. This is the only working you have to do, and just add all. So let's add 1.52 plus 0.2 plus 2.4 plus 0.17, and this gives me 4.29. So what is this? This is cost per unit. Okay, got it everyone? Okay, 4.29. Now add all these kgs as well, and we know it's 0.42 kgs. Right? So what I want standard, look here, standard cost per input kg. Per input kg I want. So what is the standard cost that I worked out is 4.29 divided by, what is the input kgs I have here? It's 0.42 kgs. So 4.29 divided by 4.2 will give me 10.21. 10.21 per kg. So this 10.21 is my standard cost per kg. It's a weighted average cost that I worked out. Okay, weighted average cost that I worked out. Okay, agreed guys? Clear? Got it? 10.21. 10.21. So let me quickly repeat. Kg multiplied by rate, cost, 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 cost. Add all total per unit cost. Add all the kgs. Okay. Then cost divide by input kgs. So you get cost per input kg. Cost per input kg. Through? Clear? Okay, so it's 10.21 per kg, right? I'm sure there's no issue here. Now let's go back and finalize the answer. So let's multiply this with 10.21 per kg, and what is the figure? So 10.21 into 1.2 gives you 12.25 as an answer. 12.25 as an answer, and this is your answer. One question just came from one of the students regarding why this is less used. So logically, I just told you this. In this case, you don't have to look at the formula strategy that I told you only for this shortcut. Logically, I told you here, Zishan, and that is your actual input was less compared to what you should have used. But if you want to make this same the way I did for the other ones, so you can just interchange their positions. You can even interchange their positions, and then you can, understand the same way as I explained you earlier, that if answer is negative, so it's adverse, and it's positive, it's favorable. Okay, but logically you can easily figure out that is 45 kgs you used input, and you should have used more. So that's favorable. Okay, got it, everybody? Right? So the final answer is what? Favorable. Less use is what? Favorable. This is favorable. So this is the shortcut that I was talking about, that you can use to save your time. And if I go back to my answer script, so 21.12, sorry, 12.21 is the closest answer I'm getting here. So my answer was 12.25. So the closest answer is 12.21 favorable. Agreed? Okay, everybody? Okay. So, okay, Ali, I'll just explain right after the break. It's time for break right now. I'll just explain right after the break. And if you have other questions, just write it down here. So I will definitely answer those relevant things. Yeah, in short, Zishan will look at standard input and actual input. How much input you have used and what you should have used. Yeah, exactly. Okay. So I hope the shortcut is clear to all of you. It's time for the break, and let's continue after the break. So it's a 10-minute break today, just a 10-minute break. So right now it's 5:32 here, local time, and I'll start 5:42. See you after the break. Now, quick few questions that I want to answer. uh, Zishan, I already mentioned that you were asking me one thing, so I just quickly want to give you the idea. Uh, if you want to follow the same principle and everybody else, anybody who wants to follow the same principle, that if answer negative is adverse and positive is favorable, so just interchange this, okay? Just make this here and just do this here. So it's just a change of placement, and once you do it, so in that case, now the rule will be the same as I told you in all the formulas. If you want to learn this easily, so just interchange this. So now if you get negative answer, it's adverse, and if you get positive, it's favorable. And conceptually as well, negative means that you have used more input, and positive means that you have used less input. So this is the first thing I need to answer here, okay? Only for this shortcut. Secondly, there was one question that someone required me to ask me to repeat this again. So quickly, you are given with these standard information in the question here, right? So you just multiply these, so you get the per unit figures, okay? Just add these figures together, so you get the standard cost per unit, okay? Standard cost per unit, and this is the total of kgs you have, right? So you divide this cost, okay, with the kgs, so you get cost per kg, standard cost per input kg. Input is very important just because that this is input, okay? We are using input method. So if we are using input method, so that's why it's important to get cost per input kg, okay? Right? So I hope this is clear how I worked out this. Uh, okay, so this is cost per input kg. It's simple, and this is a weighted average one, and like this you worked out. Now, coming back to the question again. So as this was doing problem, so I'm just moving myself from this testing platform to the original question that I have through the kit as well. So here is the same question available in the kit. So now quickly just solve the remaining two OTs of theory. Please be with me, listen very carefully because it's theory now. So let's see whether you are able to answer this or not. Now, let's move on towards question number 4. Please be with me now. In month 5, okay, there is month 5, and let's look at the information of month 5. I think it's given above. No, but nothing is given. We have information of month 6 that we'll use in the last OT. So we have just given here month 5. Romeo reported a favorable material mix variance, okay, for basic tomato pizza. Okay, it's a favorable material mix variance, right? So which of the following statement would explain why this variance has occurred? Now let's read the statements. Favorable mixed variance. So it should be scenario based, right? A, the proportion of the proportion of relatively expensive ingredients used in production was less than the standard. Second, the price paid for ingredient used in the mix were lower than the standard prices. Come on, you need to select, okay? Each pizza used less of all ingredients in actual production than expected. More pizza were produced than expected given the level of ingredients input. Okay. Now, which statement you think is favoring material mix variance? Material mix variance. So the answer is A. Okay. When you get material fixed mix variance favorable, so I already explained today, when cheaper material is used more and expensive material, yeah, expensive material is used less. So when expensive material is used less, it's favorable. So expensive material used less is favorable. So it's very clear that relatively expensive ingredient is used less than the standard. So it's favorable. Okay. So I hope this is clear. Now 5 is a tricky question. Let's see how many of you are able to answer 5. It's a tricky one. Based on the above information about month 6, which of the following statements are correct? So let's move towards month 6. Now this is really tricky. Month 6. Okay. 100 basic tomato pizza were made using a total of 40. Now this is the input, okay? It's talking about the input. So input that you have used is 42, and from this input you produce 100 basic tomato pizzas. Let's see how many of you are able to find out this. A new chef at Romeo used the expected amount of D and H. A new chef at Romeo used the expected amount of D and H. Now, this means that D and H were used according to expectation. So there was no change here. Okay. But used less cheese and more tomato sauce, less cheese. Okay. Less cheese means what? If you look here, the most expensive here was cheese, right? So less cheese means that expensive used less, and more tomato sauce. So tomato was the most cheapest one. So which means cheap used more. Come on, I'm asking you a question. When expensive material is used less and cheaper material is used more, come on guys, can you tell me this results in favorable mixed variance or adverse mixed variance? Let's see how many people will give me the answer quickly. Yeah, that results in favorable mixed variance. You are going good, okay? Because expensive material has been used less. So then the standard, it was noticed that sales of the basic tomato pizza sales had declined in the second half of the month. Sales got down. Sales went down. Okay. So let's see what the question is. Now, come on. You clearly read and try to find out the answer, because question like these make life difficult, okay, in the paper, and easily you lose 2 marks. So let's read one. The actual cost per pizza in month 6 was lower than standard cost per pizza. Now, is this a right statement? Is this a right statement? So the answer is yes. The actual cost per pizza in month 6 was lower than the standard cost. And the answer is yes. You know why? As we just saw that tomato sauce was used more. Now this is scenario based. I always say that this is scenario based stuff. Okay, you can't think general here. Okay, so tomato sauce was used more, whereas expensive cheese was used less. Agreed? So if expensive cheese was used less, so this means that your actual mix, total actual mix was cheaper. Total actual mix was cheaper. Actual cost per pizza means actual cost of the pizza was less, just because expensive ingredients were used less. So this is correct. Okay. Second, the sales staff should lose their month 6 bonus because of the reduced sales. Okay. The sales went down. We know that. Should lose their 6-month sales. Should lose Now, what do you think? By changing the mix, listen what happened. Listen, by changing the mix, which means by using tomato soup, sorry, tomato sauce more, which is of cheaper uh, rate, and cheese, which was expensive, using less cheese, could have resulted in bad quality of the pizza. Okay, bad quality. Listen to the explanations. Okay, could have resulted to the bad quality of the pizza, and because the quality went down, sales went down. Now, if the production manager, who is generally responsible for mix and yield, so if production manager changed the mix and used cheaper material more and expensive material less, that resulted in a bad quality product, which means the sales goes down. So should sales manager be held responsible for that? The answer is no. It's the principle of controllability, right? Yeah. So should health be responsible for that? No, sales staff are not responsible. In general, if you think, yeah, you would say the sales staff should not get the bonus because sales has gone down. In general, it's yes, but considering the scenario, because the mix has been changed and cheaper has been used more and expensive has been used less, so there is a very big chance that the pizza quality went down, and that's why the sales went down. So this is wrong. Sales staff will not be responsible for the reduced sales, and this responsibility should be taken by the production manager. Yes, you're right. Third, the value of ingredient usage variance and mix variance are the same. What is this? This is something out of the box, I think. Let's read the fourth one. The new chef will be responsible for material price, mix, and yield variance. This, people might say, okay, this could be right in general terms. No, it's not right, because chef will not be responsible for price, will be responsible for mix and yield. Production manager is the chef, right? So will not be responsible for price, because price is normally the responsibility of the purchase department. Yes, there are certain questions in the exam where they say that the production manager is responsible for the price, but generally they have this different responsibilities. Okay, so that's wrong. Chef, it's in general terms. You don't have to think generally. This is my point. You have to be according to the scenario. So chef not responsible for price. Being a production manager will be responsible for mix and yield only. So that is wrong. Now, I know what the answer is, okay? But the question is why this statement 3 is correct, because I'm only left with this statement now. But why this is correct? This is important to answer. So a quick working was required. Now, don't go for a guesswork, okay? For example, if the question would have said just written, just the question wrote that two statements, just tell two statements, okay? So then what would you have done? So don't think like this. Let's logically find out why this is the answer. Why? The value of ingredient usage variance and the mix variance are the same. Now, logically, why this is correct? So listen, see, just right now I explained you the input shortcut method, right? Okay, I just explained you the shortcut method. Now, actual input that you used in month 6 was how much? Let's have a look. Quickly. 42. Let me highlight this 42. Okay, for 100 basics. And according to standard, how much you should have used? It says 0.42. 0.42 is the kg per unit, right? 0.42, not 42, 0.42. So how much you should have used for 100? So for 100, you should have used 100 multiplied by 0.42. The shortcut that I told you for yield will work here. Okay, the shortcut I told you for the yield will work here. The input should be 42 kgs for 100. So this is the standard into 100 units. Okay, and you can check the formula here as well. Actual input, standard input allowed. So the allowed input was how much? 42. Got it? For 100 pizzas. And how much they did use actually? They did use 42. They did use 42. That is written in the question. So this makes it very clear that in this month 6, your actual was 42 and your standard input is also 42, which means you used what you should have used. And this means yield is 0. Simple. You used what you should have used. This means the yield is 0. So this is the benefit of that shortcut. Come on. Did you like that shortcut of yield variance? What's your feedback? Was it useful? The shortcut of yield variance without doing that long calculation. Yes? Okay. So the shortcut worked here. The shortcut worked here, and that is, as it says in the question, that, yeah, let me repeat this again. As it says in the question, that you should have used 42, you use 42 kgs for 100 tomatoes, right? Sorry, 100, not tomatoes, 100 pizzas, okay? And according to standard, what should have used? So if you look here, you should have used 42 because the standard is 0.42 into 100. And this is the same short method of yield, okay? Getting the point, right? So this means that according to the same formula, actual use 42 and you should have used 42. So this means the yield is 0. The yield is 0. Getting the point? The yield is 0. The same shortcut of yield method will result this very quickly that yes, yield is 0. Now, if yield is 0, so what you can say, as we all know, that usage is broken down into mix and yield, right? Usage is broken down into mix and yield. Yes. So if this is 0, so what it means? Mix and usage will be equal. The value will be same. Which means if yield is 0, so definitely mix and usage will be equal, because once you bifurcate usage into two parts of mix and yield, if yield is 0, so usage will only arise because of the mix variance. Usage will only arise because of the mix variance. Getting the point? Understood? So yeah, this is the shortcut. Yeah, the way we just use the shortcut made it really clear that okay, the standard input allowed should be this one and the actual is this one. If both are same, no usage variance. Value, obviously, the if quantity is same, so the value will be same, obviously, right? Value, quantity results to the value. Okay, Batul Fatma. So this is the point behind this. So clear? Right? Okay. Now, point 2 is not correct just because Fazil, sales staff should lose their 6 months bonus because of reduced sale. As I mentioned, you have used cheaper material more, that is tomato sauce, right? And expensive cheese you use less. So because of this fluctuation in the mix, your quality might have depreciated, have gone down, and because of that your sales went down, for which sales people will not take up the responsibility because it was the chef who changed the mix. Okay. Yeah. Yeah, yeah, this is my point, Fazil. This is my point. Quality responsible for the reduced sales because they changed the mix, right? So this statement 3 is the correct one because there is no yield variance here. See how tricky third statement was, to be honest. But because you know the shortcut, you could have done this easily without doing any hassle. Otherwise, you could have easily done this statement wrong. Getting the point? I'll share the solutions. So this is the yield shortcut in front of you, friends. Now, what do you think? Shortcut useful? Just quick workings in section A and B will be done through the shortcut, right? Through the shortcut, you're going to do quick workings of A and B. Come on, what's your feedback? Understood, guys? Yes or no? So the final answer is C, 1 and 3. So this is section B OTs. This is the game in section B OTs. Okay, this is section B OTs that you have to remember, that you will keep in your mind, and this is how it can get difficult. So people are struggling in section B. I hope this technique works out well for you people. Okay, now it's time to move towards the next area, and that is planning and operational variance. Ready, guys? Planning and operational. Now, as you just saw in the analysis earlier, this is tested most in your paper. So now let's start with this planning and operational area. A quick recap. Planning variance reflects planning errors, mistakes done when setting standards. Normally, the operational team, what I mean to say by operational team, when someone says operational team, so listen what it means. It means production manager, purchase manager, sales manager. Okay, so planning variance basically reflects the planning errors, the planning mistakes that are done when setting the standard. Okay, operational variance basically reflects the real performance of whom? It reflects the real performance of the operational team. Now, when I say operational team, so there are three people mainly part of this team. One is the production manager, purchase, and sales. These are the people who are involved in the day-to-day operations of the business. Okay. So you tell me if quickly, if you are a production manager and I am the planning manager who sets the standard, and if I am setting a wrong standard and that wrong standard is showing your performance adverse, production manager performance adverse, so quickly give me the answer. Will you accept this? Not getting the answers. Will you accept this if I set a wrong standard and that is deteriorating your performance? Will you accept this? You will not, because that was a mistake of the standard and you want to be assessed on a more fair basis. And that more fair basis is your operational variance, which reflects your real performance. Okay. So after this quick introduction of planning and operational, we should know that we need to work out planning operational for material, maybe for labor, maybe for sales, depending wherever there is a mistake. So remember, whenever there is a mistake in setting standard in relation to material, labor or sales, you just do one thing, you split the variances into planning and operation. Now, let's first look at planning price variance. If there is a mistake in setting the price, okay, so you break the price variance into price planning price and operational price. Okay, if there is a mistake in setting the standard in terms of kgs, you did a wrong estimation of kgs, so you break the material usage variance into planning usage and operational usage. Okay, so this is the mindset you need to keep in your mind, and this is what you need to do. So a quick idea for those who are new here, if I'm not and are not clear about the concepts, so a quick 2-minute idea I want to give to these new people. Just listen very carefully. For example, at the start of the year, we establish the standard. Okay, and this is the start of the year where we establish the standards, right? And all those standards were communicated to the production, sales, and purchase managers respectively. Okay, and those who are responsible for operations were required to follow the standards and be within the standards. Getting the point? So once the year got ended, so you got the actual results, right? So what we do, we compare the standards with the actual results, and you get what in return? We get variances. Okay, variances. Got it? So just understand planning and operational variance mechanism here. This is what I want to quickly explain you people, the mechanism. Okay, so what we do, we work out the variance by comparing standard with the actual. Getting the point? Now, once you worked out the variances, for example, the variance came out to be adverse, and you start complaining the operational team like purchase manager, production manager, and sales manager, and you said them, hello, what are you doing? You are not working well, and your variances are adverse. So in return, what they said, they said that we did really work hard and we don't know why this happened. So there was an investigation held, and that investigation later on revealed that the standards that were established at the start of the year were actually wrong. And once it was revealed that the standards were wrong, so obviously these variances will not mean anymore, which means the performance of these operational people will not be assessed on the basis of these wrong standards and the variances. So then what we do now, this is the point where we start the planning operational work. Then after the original variance is there, then what we do, we break this variance into planning and operation. So the variance that you have worked out initially based on your original standard, then you break this variance into two parts so that you eliminate the planning error from this variance, and you are just left with operational variance on the basis of which you can assess the real performance. Okay, are you getting the point? So you break the original variance into two parts just to separate the planning error component on the basis of which you will not assess the operational team's performance, and you just focus on operational variance part, and by looking at that part you assess their performance. So I hope the logic behind is clear why we split. So we split the original variance into two parts just to eliminate the planning error impact. Okay, so I hope my explanation is quite simple to learn and explain, and you have understood this. Now you have formulas here, so I will definitely use the formulas, but will make it more easier by using the shortcuts. So it's now time to move towards another question, and the question that I'm solving is a section C question. Complete this in 36 minutes according to the exam timing. Okay, 36 minutes, and we are left with 45 minutes. Okay, so we have more time. Perform clear calculations that are carefully structured, clearly set out, and all workings in a easy to follow layout so that there are references so the examiner can understand where you've done the workings. When it comes to writing theory, write accurately and coherently using simple English rather than long sentences. Simple English. Okay, so let's begin. Now, let's begin with another question for today. That is bet company. The objective of this question is first to work out the quick variances. You need to be really attentive so that you follow what I'm doing here. Otherwise, you might get confused how I've worked out the variance and you might then ask. So I want everybody to remain attentive, and not only attentive, also use your calculators and be with me. Okay, so now let's see what exactly I'm doing here. So be with me, friends. Now let's do one thing. Okay, let's read the requirements, and this is what you can do in the paper as well to get the idea what is being tested. So calculate following variances for the month of November. Today I'll try to fix this theory aspect as well, so please don't leave, be with me. Theory, I'll teach how to write the answer and in a very easy to understand method. Okay, in a very easy to understand method. So my target is theory, but let's quickly work out the numbers. Now calculate following variances for the month of November for both bed sheets and pillowcases. So there are two products. Okay, so there are two products, and what calculation you have to perform? Material price planning, material price operational, material usage planning, material usage operational. So be with me, I'll make theory really easy for you. Okay, so this is for 12 mark. Then assess the performance of the production manager for the month of November for 8 marks. Okay, now let's quickly highlight things. Bed company manufactures bed sheets and pillowcases, the two products, which it supplies to major hotel chain. It uses just-in-time system and hold no inventories. The standard cost for cotton, which is used to make bed sheets and pillowcases, is 5 per meter. Each bed sheet uses 2 meter of cotton and pillowcase uses 0.5 meter of cotton. Okay, now listen, everybody, are you with me? Right, you are with me. So listen what I'm saying here. Whenever you are solving a planning and operational question, okay, whenever you are solving a planning and operational question, remember when you are reading the question, you need to find out the original cost card. Okay, listen what I'm saying. Find out the original cost card. Okay, find out the original cost card, right? So here I have the original cost card. This is $1,000,000 point. Okay, this is $1,000,000 technique I'm telling you. So what is the original cost card? I know that this is the rate per cotton and this is the quantity. Okay, so I'll be doing the answer on a spreadsheet, and let's start doing this on a spreadsheet. So you also be ready as I'll do the answer on a spreadsheet. And the first thing, yes, Zishan, I'll be giving time to theory, don't worry. Okay, now part A. Part A. Okay, now the original cost card is very much clear, and the cost card, the original one you have already in front of you, so you can see what cost card we have. is the quantity of bed sheet and pillowcases is given. So it's what? It's 2 and 0.5. Okay, so 2 and 0.5, and the rate per hour, sorry, per meter is 5. This is the original cost card. Done. Now, the second thing to remember is, listen, when you read the scenario, try to find out anything which is uncontrollable for the operational team. What? Anything which is uncontrollable for the production manager, operational team. So try to find out that. Okay, let's go on. The actual cost of cotton is 5.8. 248,000 of cotton was used to make bed sheets and 95,000 was used to make pillowcases. Simple. The world commodity prices for cotton increased by 20%. So the price increased by 20% in the month of November. Now just tell me, just ask to yourself, is this within the control of the production manager? If you are the manager, is this within your control? Tell me, yes or no? Is this within your control? No. If this is not within your control, just quickly revise the standard. Okay, just quickly revise the standard if this is not in your control. So this is a technique I'm telling you here. Okay, so just revise the standard, which means the rate should be increased by 1.2. Okay, the rate should be increased by 1.2, or you need to multiply this with 120%, right? So if you multiply 5 with 120%, so that becomes what? That is how much, guys? That is 6. So the price has been changed to 6. Okay, I'm making a revised cost card. So because this is not in my control, I'll quickly make a revised cost card and will increase the price. Getting the point? Okay, done. At the beginning of the month, the hotel chain made an unexpected request for an immediate design change to the pillowcase. So your customer required the design to be changed. The new design required 10% more cotton than previously, and because of this, your cotton use increased. Okay. It also resulted in production delays and therefore a shortfall in production of 10,000 pillowcases in total that month. Now, you tell me here, a change of the design is in the control of production manager if you are the manager. Come on, tell me. Is this in your control? Please. Is this in your control? Please, can you tell me? This is not in your control, right? If this is not in your control, then revise the standard. Remember my simple $1,000,000 technique. Number one, find the original cost card. Then reading the scenario, if you find out that there is something not controllable for the operational manager, just revise a cost card. Okay. So this is not in your control, which means in case of pillowcases, we will multiply this with 110%, and this will become 0.55. This remains same at 2, and this will become 0.55 because this was just mentioned about the pillowcases. Okay, so just revise the standard. Are you getting the point, everybody? Just revise the standard, and I've done this. Now once you are done with this, you have two cost cards available. One you have is original. Okay, this is original, and second you have is revised, and now your calculation will become really simple, really simple. Okay, got it, everyone? So let's summarize what I said here. What I said here, I just said that whenever you are solving planning operational question, what you have to do, it's very simple. What you have to do, guys, you have to simply read the question and find out the original cost card. Okay, original cost card. And once you have found out the original cost card, then see what is it not in the control of the manager. Something which is not in the control, just revise the standard, but you have to consider operational team only. Okay. So once you will revise, you have two standard cost card, and now you can perform the calculations. Are we all ready? So let's use the testing platform and find out the answer. So let's find out the answer very quickly. And I'll introduce a shortcut as well in front of you. Okay, so part A, first we need to work out we have the cost card mentioned here, original and revised. Okay, so now first we need to work out the planning price for bed sheets, pillowcases. Okay, then we'll work out operational price for bed sheets and pillowcases. Okay, after that we'll work out the planning usage for bed sheets and pillowcases, and then we'll work out the operational usage for both bed sheet and pillowcases. Okay, so the weightage is given to you in the paper. It's simple, 3 marks weightage for each, right? So we have the cost cards as well. Now let's start the solution. This is the cost card. Revised is separate, original is separate. Let's start first with price and operational for bedsheet and pillowcases. Okay. Now, if I go back to my formula sheet, so I can use my formulas here. Okay, I can use my formulas here, and this will make it very simple. So remember the shortcut. You can see the operational price and planning price. So it says original standard price minus revised standard price. Okay, original minus revised. So it's O original versus R for planning. Okay, O versus R. Basically, planning is a fight between original standard and revised standard. Simple. Original versus revised. This is planning. Okay. For operational, it's R revised versus actual. Actual. Okay. So I'm making this a very simple formula for you. Planning is original versus revised. Can you see above? And operational is revised versus actual. So learn this shortcut. Come on, just quickly write. Planning variance is O versus R, original standard versus revised standard. It's a fight between two standards. And the operational is a fight between revised versus actual. Come on, just write it down, please. Where are you? What is planning? O versus R. And what is operational? R versus A. I can't see the written things in the chat box. Yeah. Okay. So keep this in your mind. O versus R, R versus A. Right. Same here for usage as well. Original O versus R revised. For operational as well, it's R revised versus actual. Okay. So this is the shortcut. Do keep this in your mind. Okay. Now let's do the working. Let's start first with the operational price. I'm starting first with operational price, and you do the same thing. That will save your time. Okay. So how to do the working, guys? What is the formula? The formula is R versus A. So do we have the figures given here? Yes, we have the standard. I'm highlighting in front of you. So the revised price is 6 for both. It's 6 for both, right? And the actual price is 5.8. Okay. Okay. And the quantity of material is different. So for bed sheet, it's 248, and for pillowcases, it's 95,000. Okay. So I do remember the formula R versus A. So revised minus actual. So let's do it. Is equals to revised is 6 minus actual is 5.8, and the quantity is 248,000. This is the answer. If you follow my formulas, if you get a positive answer, it's favorable. Okay, done. For pillowcases, as the price is same for both, so it's 6 minus 5.8 into what, friends? 95,000 quantity. So this is positive, this is favorable. Simple. It's a comparison between R versus A. So you can see revised minus actual into actual quantity. Got it? Okay, great. Now, having done the calculations of operational price, just copy this and paste where planning is. See, paste. And same pillowcases. Copy this and paste there. Control C, copy, and Control V, paste. Now, why I've done that? This will save a lot of my time. I will just do the necessary change. So what planning is? Planning is O versus R. O versus R. And I know that what original standard and revised standard is, because I've already found out this initially. So it's very much simple in front of me here. As you can see that the original is 5 and revised is 6. Wow. Simple. Simple. Okay. So I'll just make the necessary price change. So let's do it. Now original is 5 and revised is 6. Got the answer. Again here, original is 5, revised is 6. Got the answer. That's it. So simple. Original standard versus revised standard. And if you follow my formula, you get the negative answer. It's always adverse. Done? Okay, great. Done. Now adverse means obviously what? Adverse means obviously what? Your revised price has gone up. Your standard original was 5 and your revised has gone up. So when revised goes up, because you rely on revised, you trust on revised, because revised is more realistic for you, right? So if you trust more on revised, and if revised goes up, it's cost increase for you, and that's adverse, because we rely on revised standard, and that is a realistic one. So if realistic standards goes up, it's adverse, right? For operational, it's favorable just because you bought for a lower amount compared to your revised standard. Your revised is 6 and you bought for 5.8. So that's logically favorable because you bought for a lower quantity. Done with this. Easy. Now, operational price and planning price done. Come on, guys. What's your feedback? Easy or difficult? Quickly. You don't have to write equations. Okay, Adarash, you don't have to write equations. Easy. O versus R versus A, right? Now, coming towards the usage. So again, start from operational first. Okay. When it's you can even start from planning. That doesn't means you can't, but sometimes it's easy to start from operation then go towards planning. Now we are done with this. Now we are moving towards these two. So you know we are starting with the material usage operational for bed sheets. The bed sheet quantity wasn't changed, so that was same. No revision in quantity was made for bed sheet, right? So that was 2. So revise is also 2. And how many units actually be produced for bed sheets? It's 120,000. Okay. So let's do the working. Standard rate 5, bracket open. Well, open 2 brackets here. Okay. 2 standard kg per unit multiplied by 120,000 units. Close the bracket. Okay. This is my revised quantity allowed minus actual quantity. So what is actual, guys? The question has stated actual is 248,000 here. 248,000, close the bracket, and you have the answer of 40,000 negative, and when it is negative according to my formulas, it's adverse. Okay, so you can look at the formula as well. Standard price per kg, revised standard quantity allowed minus actual quantity. Okay, actual quantity. Thank you, Zishan. You like my techniques. Okay, so actual quantity. Understood, guys? So very easy. Okay, this is becoming very easy, right? I hope you know how to work out the quantity allowed, right? It's standard kg per unit into actual units. Now, done with this one, let's move towards the second one. Same is equals to 5 multiplied by bracket open 2 times. You have to open the bracket. Now for pillowcases, the revised quantity has changed, and that is 0.55. Okay, 0.55. And how many units? Revised cost card 0.55 multiplied by pillowcases units are how much, guys? It's 180,000. 180,000 actual. So 0.55 multiplied by 180,000 bracket close minus the actual quantity that you have used. So what is the actual quantity? 95. Here it is, 95. Okay, 95. Close the bracket. 20,000 is the figure you are getting here, and I hope this is clear. This is favorable. When you use my method, you get favorable. Okay, so understood. This is what R versus A, revised standard versus actual figures. Okay, Shamuna, let me quickly tell you the working of revised cost card, which is straightforward. The rate of 5, okay, was multiplied with 120% to make this 6, because 20% increase in the price was done. For pillowcases, the quantity had to change, and this was by 10%. So I multiplied this 110 to make this 0.55. So 10% have been added for pillowcases standard, and for the rate I've added 20%. but nothing will be done for the quantity of bed sheets. Okay. So for pillowcases, you can see here revise standard into actual units of 180,000 minus actual quantity of 95,000. Okay, guys, are you all with me? Karthik, I've repeated this again. Okay. Now, done with this one. So let's move on to the next one. No need for separate columns, just do in one cell. That's okay. Now I'll just copy this and we'll paste here. And I'll copy this and we'll paste here. Control C, Control V, and we'll do the necessary change where I need to, right? So I know planning is what? O versus R. Planning is O versus R. Okay. So this is the formula I have in front of you. Original standard price into original standard quantity allowed minus revised, right? It's O versus R. So let's move on. For, listen, I will not do any working here. I will not do any working for bed sheets. You know why? Because bed sheet quantity hasn't changed. There was no revision. It was 2 originally and it is 2 in revised as well. So there is no change in this one. So no need to work out, just write it 0 because no standard revision was made. As this is O versus R, so you don't have to perform calculations at all because no change in the standard. Original standard was 2, revised was 2, so no change, right? So don't do the working, just write it 0. Examiner knows it. Examiner knows it, so this is 0, okay? Yeah, you are allowed to write in one cell in the paper. Okay, this is 0. Got it, everyone? Now, for the second one, let's do the change. So, original quantity allowed, 0.5. Okay, 0.5 into 180,000. Just copy this and just open up a bracket and just replace this with same 0.55 into 180,000. See the workings? Let me show you this again. Open the first bracket, then the second one. 0.5 is the original standard into 180,000 actual units. This is original standard quantity allowed minus revised 0.55 revised quantity into actual units. Okay, into actual units of 180,000. So this is original standard quantity allowed minus revised standard quantity allowed. You can see the basic difference is of this quantity versus quantity, original versus revised, and you are getting answer of 45,000. Okay, got it? Right? So we are done with the workings, and if this is negative, it's adverse according to my formulas. Right, guys? So I hope this is clear. The technique of O versus R and R versus A is clear to all of you. Okay, let's move on. Now, now the theoretical part. So let's make theory easy for you. Are you ready to make theory easy for you? Okay. Done with the calculations. O versus R, R versus A. I hope this is clear to all of you. Now, this is something I've used for material, and this will be the shortcut for labor. Listen, for material and labor, the shortcut is same. O versus R, R versus A, because these are cost. Just in case you work out for sales, So the shortcut will reverse because sales is reverse to cost. So if you work out for sales, the shortcut will reverse, and this will be O versus R will be what? R versus A for planning, and for operational, R versus A will be reversed and will be A versus R. So for planning and operational, the shortcuts will get reversed in case of sales, because we know that when cost increases, it's adverse, but when sales increases, it's favorable. So if you watch my previous webinar of December 2020, I'll share that in the $1 million plan. So in that, I've solved planning operation of sales, and the shortcuts will reverse in that case. Okay. Now, coming towards the theory, let's practice to master our skills in theory. So be ready with me. Okay. When we deal with theory, so remember there are two types of questions. I've done a detailed discussion on theory in December 2020 webinar day 1, and I have shared the link as well in the $1 million plan yesterday on WhatsApp group. So do look at that, because that is a very detailed discussion on theory. Right now, I'll just give you a quick idea. So your theory questions are either knowledge based or application based. Knowledge based means that you just have to write about the knowledge, like for example, some definition came in the paper, you have to just write the definition. Sometimes advantages, textbook points you have to write. Knowledge based, you don't have to link with the scenario. Okay, no link with scenario. Application means, yes, you have to link with scenario. Okay, link with the case. So more tough are application based, that are linked with the scenario, but knowledge based are not linked with the scenario. So both types are tested in your paper. Okay. Second, every requirement, break every requirement into verbs and elements. Objects are also known as elements. Okay. So break every requirement into verbs and elements. So what are verbs? Like explain, discuss, justify, evaluate, compare, calculate, estimate. These are verbs. Okay. So whenever you're dealing with theory, just find out what the verb is and the element. Element means object. That for what thing the verb is used. The key is to find out the element. If you are clear about the element, then you can answer appropriately if you are clear about the element. Okay. So whenever you attempt a question, two things you have to consider in that. Number one, is the theory question knowledge based or application based? Second, what are the verbs and the elements, the objects? Let's use this on the current question that we have. Okay. The current question is, let's see, assess the performance of the production manager for the month of November. This is for 8 marks. Now, the first thing is, what is the verb? So the verb is assess. Like this, your theory will become really strong. Okay. Now, what to assess? What to assess? What to assess is what? It is the element. It's the object. So what to assess? You have to assess the performance. So the object, the element is performance. The element is performance. And you need to learn how to find out the elements, because the more the elements in one requirement, the marks are distributed accordingly. Tomorrow, I'll be moving towards very important section of performance measurement, and their elements will play a major role. Okay. So the element is what? Performance. Okay. So you have to assess the performance of production manager. Now, is the element clear? Yes. Now, can you tell me, is this knowledge based or application based? So what's your answer? Tell me please, knowledge based or application based? What's your answer? Yeah, it's application based, because you have to keep in mind the scenario, and considering the scenario, you have to assess the situation. Keep in mind the scenario, and considering the scenario, you have to keep the things in your mind. So it's what? It's an application based. Done? So come on, tell me, whenever you are solving any theory question, two things you will look at. What? Is it knowledge based or application based? This is an application based because it requires you to apply the things that are given in the scenario. You have to link with the scenario. So it's application based, right? And the second thing that you will find out always will be what? Is it, what are the verbs and the objects? Okay, so the verb here is assess and the object is performance of the manager. And further, we will use this technique more in remaining 2 days as well. Okay, especially when we are doing performance measurement. Got it? Done? Now, another $1 million technique, and this is for variances theory. This is for variances theory. The general technique, I made this clear. This was a general one applicable for all. Okay, understood everyone? Are you with me? Now, technique for variances theory. You can apply this when you are doing mixed yield, you are doing planning operational, or you are doing sales mix quantity. So what is the technique? Number one, calculate the variance, then reason. Think the reason and select according to case. I'll make this peanuts for you. Be with me. Don't leave. Interdependence. What it means? When due to one reason, one variance is favorable and other is adverse. One reason making one favorable and other adverse. Interdependence. A quick example. You bought good quality material. So buying a good quality material resulted in what? Your price variance became adverse because good quality was expensive. Okay, good quality was expensive. So your price got higher and it was adverse. But because of good quality, less wastage resulted and usage became favorable. Less wasted resulted and usage became favorable. Are you following me? So yes, because of good quality, price variance became adverse, but usage variance became favorable. Right? So one reason of good quality making one adverse and other favorable is interdependence. Interdependence means that when one reason is making one favorable and other adverse. So I just gave you a very good example. If you bought good quality material, so that will be expensive, which will make your price variance adverse, but will make your usage variance favorable, just because good quality means less wastage and less wastage means more favorable usage. Got it? Interdependence. So you need to find out interdependence in the scenario. If it is, so mention it. If there is no, so don't mention it. It depends scenario to scenario. Then conclusion about the performance. So what is the shortcut? CRIC. Come on, just write it down. What is the $1 million technique to write the theory? It's what, guys? CRIC. Calculate the variance, reason, interdependence, conclusion. So yes, let's apply this technique on the current situation quickly. Now, are we done with the calculations? Yes, we are. Yes, we are. So these are the calculations I have, right? Now, calculations done. I'm applying CRIC here. Calculations done. Okay. Now, reasons. Be with me, guys. Be with me. I'll make this really easy. Reasons. So now calculations done. Reasons. Now what to do? For reasons, First, start with planning. Okay. First, start with planning and then move towards operational. First, start with planning and then move towards operational. Understood? So let me do one quick working here. What I'll do, I'll just work out the sum of these. Total planning price, total operational price. Getting the point, everybody? Okay. Okay. In this case, total planning usage. Okay. And in this case, total operational usage. So let me just highlight this so that you are able to pick what I have done here. I'm using the total numbers. Okay. Now, these are the total figures I have. Okay. And now let's start thinking about the reasons. First, start with planning. So let's start with planning price. Why planning price is adverse? So listen, my friends, whenever you are finding planning variance reasons, so those are given in the question. Remember, those are given in the question. Always planning price reasons are given in the question. Either they are not given or they are given. If they are given, they are in question. So can you tell me why this is adverse? Why planning came adverse? Okay, it's simple to figure out. I'll highlight here for you people. Be with me. Let's do one thing. Let's erase everything to make it more simple, clear. Okay. Now, why this came adverse? Why price planning came adverse? See, this is the reason. That's it. That's it. I'll make it very simple. World commodity price increased for cotton. That's by 20% increase. Done. So the reason is world price 20% increase. See, done. Let's start first with planning and then we'll move towards operational. Okay, be with me, don't leave. Now done. Which is the second planning variance here? This is the second planning variance, which is usage. Now, why usage is adverse? Why usage is adverse? Again, it's a planning variance. You will find the reason in the scenario. So let's go and find. Simple. Why usage planning is adverse? See, because of this. The new design required 10% more cotton than previously. And this is not in the control of the manager. So easy. So easy. And I'll show you the way I'll write here. Okay. It will be shocking for you. So easy. So got it. 10% design change. Okay. Are we clear about this, guys? So my $1 million technique says, first calculate the variance. I've done that. Then it says find out the reasons. Let's start first with planning and find out the reason in the question. I've done that. Okay. Now let me show you the drafting part as well. Let's start looking at the drafting part. Let's now look at stepwise approach to draft the answer. This is Rizwan Mania creation. So yeah, do appreciate if you like. Guidance. Start from the overall variance where possible. I'll tell you what this means. So just leave it for a few minutes. Just leave this for a few minutes. Now, move towards planning. Move towards planning. What this means. What you will write. The planning variance of both material is adverse. Now, what is the amount? 343,000, right? 343,000 due to 20% increase in cotton price. This is something you found out from the question. Okay, done. Now, planning usage variance of 45,000. So how much is this? 45? Yeah, 45,000. Adverse due to request for a change in the design of the pillowcase by the customer. This is given in the question. Got it? Simple. These are the reasons I found out from the question. Is the trick working well for you people? Then, once you are done with the planning variance, give a disclaimer. Give a disclaimer. What is a disclaimer? What is a disclaimer? Just click the remote. What is a disclaimer? Disclaimer is, now tell me, if you are a production manager, will you take the responsibility of these variants? Say yes or no. Quickly. Say yes or no. Will you take this responsibility? Say yes or no. No. Then just write it down. Just write it down. Both of these factors are not in control of production, so should not be used in assessing his performance, which should only be based on operational. Simple, easy, no issue at all. Okay, understood? So easy it is becoming to write theory now. Getting the point? That's it. Done with planning. Just write the disclaimer every time because this is important because you are not responsible for that. Getting the point? Okay. Now coming towards operational. Okay. Should we continue for 5 more minutes and complete this, or you want to end here? I think we should complete this, you know. Yeah, let's complete this, right? Okay. So now coming towards operational. So what the $1 million point says, now coming towards operational, and let's find out the reason. Find from the scenario again. Okay. Operational price 68,000 favorable. Operational price 60,000 favorable. Come on, guys. Operational price 60,000 favorable. So, do we have any reason in the scenario? Do we have any reason in the scenario? Not exactly. We don't have as such. We don't have the reason why this came favorable, but the only thing we're going to say here is that manager managed to buy for less than 6. Okay. No specific reason is given here in the scenario. If there would have been any specific reason, I would have definitely written here. Definitely written here. So I'll just write here, manager managed to buy this less than the revised 6. Okay. Great. Okay. The performance here is good in terms of the assessment, right? Now the last one is operational usage. This is adverse for bed sheet, but for pillowcases it's favorable, but the net result is adverse again. So operational usage came adverse. Operational usage came adverse. Any reason given in the scenario why this is adverse? I don't have reason here, like wastage kind of a thing. Nothing is given. Okay, I don't have reason here. So again, I will write here that in this case, manager didn't perform well. Here, the manager didn't perform well. Okay, got it? No specific reason. No, lower price results in bad quantity. Okay, now this you just mean to say by looking at, just wait. We don't have the possible reason here, right? That why this happened. Okay, now listen, it's good to uh, be more specific according to the scenario. Scenario based reasons are important. So for planning, you saw the reason were given in the scenario. There are certain scenarios where you easily find reasons for operational as well. Okay, but if you don't have any reasons, you can just write it, general, but not get into so much detail, because we are not exactly clear about the general reasons, right? Yeah. So try to be more specific to the scenario, right? So nothing as such mentioned here. And now let's see what to write. Okay. Then discuss operational. The operational variance of both material is favorable by how much? 68,800. 68,800. The manager performed well. Okay. The manager performed well. We don't have any specific reason. So if you want to write, just write it in short. Maybe this uh, is favorable. But once again, what can I guess here? So I think let's be scenario specific. If there would have been any hint given, so we would have used that hint, obviously. Okay, getting the point? Okay. Second, however, the operational usage variance is what? 20,000 adverse. Okay. Now, why this is adverse? The major reason for adverse operational variance related to production of bed sheets rather than pillowcases. The performance of production manager is weak here. As you just saw that this resulted because of bed sheets, and he didn't perform well because you were required to assess the performance, and by looking here, the performance of the manager in case of operational usage was not good, but yeah, in case of operational price it was good. So try to be scenario specific, try to find out points from the scenario. For operational as well, you will get the reasons in the scenario, which you can think and select and write according to the situation, right? So I think this is what an assessment is according to scenario, right? And done with this one. Okay, so now before I conclude, I just want to move towards to the $1,000,000 technique. This is clear. This is clear. Scenario based. Interdependence, I cannot exactly say here interdependence because I don't have exact reasons that whether cheaper material was bought and that resulted in more wastage. Okay, so I didn't have any interdependence exact clue in this case. So I can't exactly say because they bought a cheaper material that resulted in price being favorable and uh, usage being adverse. So I don't have clue like this, so I can't go for interdependence here, and then I just need to conclude. So now listen very carefully. The last point I want to make here is how to start. Now it's up to you. Last thing, listen, is up to you. If you want, you can start from overall variance. Now what is overall variance? Just have a look. Just net off all these, you will get the overall variance. See, like this. 343 plus 68 plus 45 plus 20,000. See, this is the overall variance. If you want in the paper, you can start with the overall variance. Like this. You can start with the overall variance. Just net off all if you want to. See, you can start with the overall variance if you want to. So by looking at this overall, I just netted them all, right? So by looking at the overall 339,400, the performance is not satisfactory. This is adverse. So it's up to you. If you want, you can start with the overall and you say the overall performance is not satisfactory. But you can't comment on this amount. Reason, it includes the planning and the operational part. So that is why we'll write, to assess real performance, we need to bifurcate into planning and operation. Getting the point? So if you have option in the paper to start from overall, you can start from overall the way I did. Then you say that we need to assess properly, we need to break it into planning and operational, and then first start with planning, find out the reason from the scenario, give a disclaimer, this is out of the control, getting the point, and then move towards operational, find out the reasons from the scenario, okay? And last, if you find any interdependence, do mention. I am not doing because I can't find the reason. Then you will conclude, and conclusion will be done on the operational variances only. Okay, so operational variances only will be used for conclusion. So let's see. Operational price is 68,600 favorable, and operational usage is 20,000 adverse. Come on, tell me, if I net off these two, is the final answer favorable or adverse? If I net off the operational variances, because my conclusion will be on the basis of operational, because manager are only responsible for operational. So remember, the conclusion should be given on the basis of operational only. So overall it's favorable, so the performance seems to be satisfactory. Getting the point? Understood? Okay, last, the answer should be in multiple paragraphs with no bullets. Okay, with no bullets. So here I just used bullets to make it simple. I just wanted to make it stepwise approach for you, but you have to write in multiple paragraphs. I will send you the answer on the WhatsApp group, the drafted answer on the WhatsApp group in proper paragraphs. Okay, now the $1 million plan for the variances, guys: mix, yield, planning, operational, and learning curves. You have to watch the videos from my previous webinars. I will share the link so that you can cover variances completely. Further theory will be covered through those. Okay. Now, before I wind up and ask for your feedback, listen carefully, everyone. For planning and operational, there are two key things to remember. Number one, when you are calculating planning operational, so when you read the scenario, just find out the original standard, okay, and look for the factors which are not controllable for the operational team. Okay, look for the factors which are not controllable for the operational team and just revise the standard. For all those factors which are not controllable for the operational team, revise the standard. So once you do this, you have original standard and you have revised standard, and you can do the workings really easily then. For planning cost, it's O versus R. For operational cost, it's R versus A. It will be reversed for sales. Okay. Last, for writing the theory, the $1 million technique is CRIC. What is CRIC, guys? First calculate variances, then look at the reasons. For reasons, what we were required to do? First planning and then operational. In planning, you have to give a disclaimer that this is out of the control of the production manager or operational team. Okay. And then for operational, you tell the reasons, and it should be scenario based. Getting the point? Getting the point? Last is the conclusion. Conclusion will always be given on the basis of operational ones for the operational team. Okay. So I hope this quick summary will help you. $1 million plan, I will share the WhatsApp group. Those who are not part of the group yet, please send me a quick WhatsApp message as this number, and I will share you the group link and will share the drafted answer and the $1 million plan. What is your quick feedback about today's session, guys? How was the today's session? Learn new things. Was this a game changer again? Techniques, theory, OTs. I'm covering all the things. OTs, theory, and everything. Please, a quick feedback. Was my effort worth it? Happy, everyone? Okay, so I took more 15 minutes. Sorry for that, but I wanted to complete this theory. So remember the $1 million technique of theory. Stay connected with my WhatsApp groups. Tomorrow, we will be doing very important section of performance measurement. Make sure tomorrow you all are part of the session because I'll be telling you some unique game changer techniques for performance measurement. Please give your feedback to ACCA Pakistan. Right after the session, you'll get a feedback form. Do share your feedback. Thank you very much, guys, for being part of the session. See you tomorrow.